Welcome to this week's African Agri Overview, where we'll be looking at the latest grain price movements as well as our price expectations as we head closer to the end of the year. Make sure to click on the like and subscribe buttons if you want to stay up to date with the latest developments in the agricultural markets of Africa. Hi, I'm Dr. Johnny van der Merwe and welcome to this episode of the African Agri Overview made possible by Zamatic irrigation systems. Zamatic pivots and lateral move systems combine high-quality components with exclusive structural designs and innovative features for a long-lasting solution you can count on. Make sure to contact our regular market analyst, Jacques Pinaar, for more detailed reports on the African soft commodity markets. Looking at the latest oil prices, we saw these prices being very volatile over the past week, ending at $82 per barrel over the weekend due to concerns about lower demand overshadowing other factors and keeping oil prices on a lower level at the moment. But with that said, Jacques will now tell us more about the latest developments in the grain markets. Over to you, Jacques.
Thanks, Johnny. This week we revisit the Zambian maize market. Since our last update 6 weeks ago, the Zambian maize price increased by 10% in kwacha terms but sideways in dollar terms, trading at around $310 a ton. The kwacha has depreciated by 12% since middle October and by nearly 35% since June, as indicated by the blue circle on the graph. Let's recap our SND forecast for the current marketing year, running from more or less May 2023 to April 2024. We continue to use the Zambian government's last production forecast of 3.26 million tonnes, but lowered our annual consumption number from 2.6 to 2.4 million tonnes, which saw ending stocks improve to 400,000 tonnes. The consumption number includes all maize milled in Zambia, including exported maize meal. As indicated before, both maize and maize meal exports banned this season. The market estimates Zambian mills exported as much as 20 to 25% of their maize meal output to the southern DRC during the last 2 marketing years. With exports banned this season, very little has been exported. Maize brand prices relatively high, also a sign of slower milling. This should see millers mill less and relieve pressure on the maize balance sheet, i.e. more ending stocks. Also, we understand the commercial market and the FRA government procurement arm combined contracted around 100 to 120,000 tonnes of early maize for delivery April to June 2024, mainly under irrigation, which should provide further supply relief. We do not expect Zambia will need imports despite expectations of continued informal exports to Malawi. Observers indicate seed sales significantly higher than normal for the new crop to harvest mid-2024 due to attractive prices the past season. Talk of a 4 million tonne crop given normal growing conditions. Question is, what impact could El Nino have? There continues to be reports regarding the strengthening El Nino weather pattern that normally cause above normal rainfall in countries like Tanzania, Uganda, Kenya and northern Zambia, and below normal rainfall in countries like Mozambique, Malawi, Zimbabwe, South Africa and central southern Zambia. Green indicates above normal rainfall and brown below normal. We have to say the signs of an El Nino weather pattern are growing, well above normal rain in the mentioned East African countries the last few months. At this point, rains are late in southern Africa. Zambia did receive some rain the past week, but only time will tell the potential effect El Nino could have on grain production in southern Africa. This graph illustrates the Zambian maize price history. Despite the 15% decline latter half October, prices remain relatively high. Our contacts indicate demand from both food and feed millers slower. High maize meal and feed prices have slowed offtake and the DRC maize meal export market not in play this season. We are of the opinion Malawi will remain an importer of Zambian maize when pricing makes sense until May 2024. At this point, export parity to Malawi around $270 to $280 a ton, see the blue line, versus the Lusaka price at around $310 a ton and Eastern Zambia price, Chipata region, around $280 to $290 a ton. Malawi prices did soften significantly after the government devalued the Malawi kwacha by 40% versus the US dollar early November, which basically stopped imports from Zambia. But some losses have already been recouped. We do not expect Zambia prices to move much below Malawi export parity short term.
Thank you very much, Jock, for sharing such valuable insights. These videos are made possible by Zambian Irrigation Systems. For those seeking more detailed information and comprehensive reports on sub-Saharan African soft commodity markets, I encourage you to reach out to Jock Pinaar. I'm Dr. Johnny van der Merwe, and thank you for watching.